Bismillah ar-Rahman ar-Rahim. I'm sorry because I use a hearing aid. I need some explanation of your questions. Let me start with the question about hedge funds. That okay, if we do not permit this and that, then people go and buy shares in hedge funds which do these activities. Uh, of course, who said hedge funds as such are permissible or not? You have to see exactly what they do. If hedge funds engage in some of these operations, I certainly will say they are illegitimate operations. So the mere fact that some fund calls itself hedge fund, we cannot say it's acceptable or not from Sharia point of view before understand exactly what they do, what types of contracts they engage in. And if they engage in contracts which we deem to be unacceptable, it means they are not permissible. So, for your knowledge, of course, you know this, hedge funds is a misnomer. Hedge funds are not there to hedge risks. They are there to exploit market operations to make money in arbitrage among various types of risks and prices. So you cannot judge on the basis of names. You have to go by the activity in detail. And of course, when we have an activity, to give it the full Sharia opinion, you not only have to know its form, you must have to know its economic function. What does it help us achieve? Sometime, if you can show a certain very worthy objective, acceptable in Sharia, cannot be performed except through this activity, Sharia may well give you permission to take exception from general rules in order to achieve or to generate this human utility which is not available otherwise. But if it turns out when you examine the economic function that this helps achieve, you find that this is itself not a worthy objective or even it's prohibited or not useful. In this case, you will tighten the rules. This exactly applies to sale of salam in shares, as I told you about Maurice Allais reaction. طيب, let us take the question of money, that its purchasing power changes over time. So if we apply our logic about shares not being suitable for borrowing, does this not apply to money also? This is a legitimate objection. But you cannot in society run without a basis called money. You need to have a basis where values are attributed. You know the function of money. So, even though we know the general price level goes up and down, we know for sure Sharia, in spite of that being a known fact from all times, it permitted borrowing and lending. You take, like in gold. Gold and silver were there at the time of the Prophet of Sayyidina Muhammad sallallahu alaihi wasallam. They were their commonly known monies. And Sharia permitted borrowing and lending in them in legitimate ways, even though it is known that what we call now the general price level goes up and down. That is the price of gold and silver. In fact, I can give you a reference of Hadith Sayyidina ibn Umar. It is a highly authentic hadith, where he asked the Prophet ﷺ about that he sells camels and gets sometime in silver the payment, and remaining price he gets it paid in gold, etc. It's a long hadith. I cannot go in detail. But in the answer, the Prophet ﷺ answered to him, he said, so is legitimate إذا بعتها بسعر يومها. He was referring to a remaining debt which is in gold and being settled in silver, or vice versa. The hadith says, if you sell it at the daily price, at the prevailing daily price, that is, they knew from that time price will go up and down. And we know in early Muslim history, there was a period of some inflation. At the time of the four guided caliphs, price went up significantly from the time it was at the time of Prophet ﷺ. So I would say money permitted for borrowing and lending, in spite of the fact that general price level changes, is well established fixed point. But to extend it to shares is no, it is not acceptable, at least in my view. Let us talk. The other question was about Arbon. To what commodities can we apply the Arbon sale? In brief, the fuqaha are very serious thinkers. So when you go to sarf, ahkam sarf, that is foreign exchange. You know, in foreign exchange, if you want to say, I have British pounds and I need to buy euros, they say it's okay, but you have to exchange it simultaneously. So obviously you cannot, if I have British pounds and you want to buy them from me, you cannot buy them on basis of Arbon, because you must make the full exchange right away. And the same for Salam. You cannot initiate a Salam sale on the basis of Arbon, because Salam requires the full price paid upfront. So the general fiqh rule says, any transaction where one counter value had to be given right away, Arbon cannot apply to this counter value. This is the general rule. Now about debt. The question about a company being indebted in a high degree or lower, that is leverage, we will tackle in topic 2. So it's easier to address it in our next topic. طيب. Let me move to topic number 2, cleansing of impure income from mixed shares. Now, the same, you will notice the same standard number 21 by AAO also addresses the question of, number 1, selecting legitimate stocks to own and trade in, and the cleansing of those stocks which have some impure element. I will not, of course, the details are too many. I will do not propose to go over them all, but I will highlight this matter of cleansing. First of all, you realize the general Sharia rule is that you are permitted to buy shares if the company issuing the shares, all its activities are legitimate. So this is the first filter, the business activity. The business activity had to be legitimate. And number 2, the company does not, in pursuing its business activity, engage into unacceptable contracts. Now, it was observed that in present-day economies, even in Muslim countries, there are many violations of various degrees existing in the economy. So one typical example, a company may doing a very legitimate activity. Say they are trading in manufacturing shirts. This is very legitimate. But in pursuing this activity, they are also borrowing money at interest and putting their balances in the bank and earning interest on them, etc. So even though their business activity itself is legitimate, they are often using subsidiary contracts or financing which are not acceptable. Now, this for some time, the general opinion among several fuqaha that say you may not buy a share of a company if it also, even though its legitimate activity is its business, but it engages in some illegitimate contracts like financing, as I described, on an interest basis. Now, other fuqaha said that, look, if we apply this rule strictly, it means Muslims may not find in their own societies many company shares which can be bought and sold or owned for their own personal investment. And this will be a pretty bad result, because it means people who are concerned about halal and haram will be shut out from so much of the business activity. Anyhow, there was a lot of discussion in the early 90s about this topic. And finally, one major Sharia board made ijtihad saying that, look, we have to permit this in a limited way as a transition solution, in order not to shut Muslims completely out of their investing their savings and earning halal income. So the issue of buying shares which are not 100% acceptable came up. Now, unacceptability, to know whether a certain company share are acceptable or not. Now, the common procedure now among people who accept this transitional solution is to apply basically two hurdles or two filters. The first filter is the business activity. They say the main business of the company whose shares you are considering must be legitimate. Now, what do we mean by main? They give a detailed ruling. They say if the illegitimate activities do not generate more than a small percentage of the income of the company, so maybe 5%, something like that. This is the ratio adopted, that the ratio of income generated by the illegitimate business activity should be pretty small, something like 5-6%, no, or less than 5%. The second filter relates to debt and financing. Now, I will not go in the detail. We want to see the big picture. Basically, as you see in the standard, they say that the main illegitimate thing done by many of these otherwise legitimate companies is that they borrow at interest or put their money in interest bearing deposits. They say the ratio of debt, whether short or long term, in the assets of the company, the ratio should not exceed 30% of the capitalization of the company. You take the company stocks, they have, say, 1 million shares. Suppose today they are selling at £1 per share. It means if they have outstanding shares 1 million and each share is selling today at £1, it means their total capitalization today is £1 million. their debt today, whether long or short term, what proportion does it make relative to the 1 million? If it's anything above 30%, they say this breaks this second filter. There are other details, but this is the essential point. So when you now, one thing I have to add, and this is clearly mentioned by several Sharia scholars, and in the standard itself, it says these ratios have no nas or textual basis in Sharia. You cannot find a hadith or ayah in the Quran or a saying of a major faqih giving this 5% or 30%. So they say, where did we get these numbers from?